Hey everybody, this is Nate Smoyer, and you're listening to the Tech Nest Podcast. This is the show where we sit down with the leaders in real estate and technology to find out what they're doing to transform the way we buy, sell, and invest in real estate. If you've got an interest in real estate and technology, stick around. You're in the right place.
Okay, we've got a great show for you guys today. I have the CEO and founder of TheHouseMonk, Ajay Kumar, on the show. And we're talking really two things. First, we're going to talk about TheHouseMonk and what they're doing. And, the way, we kind of describe it is really it's an app that and solution they created to make the experience of being a tenant better. This is, tenant-to-tenant communication, building services, security, payments, all that. What's really fascinating, and this is really kind of new territory for the Tech Nest podcast, because we're going a little more international, and this is going to be an intentional move for the next year as we start to feature guests from outside of the U.S. They're already in 9 different countries and doing, tenant rental management through an app. And that's very impressive because, as we'll talk through on the show, there's significant cultural norms and tendencies that change from country to country. In addition to that, Ajay's talks through some of the reasons that the HouseMonk has actually recently shifted more into the co-living market. And they just released the 2019 Global Co-Living Report. It's a 61-page document that details what the global opportunity is in co-living, which country is leading that from a market size of $6.8 billion, and what that looks like for the U.S. So I think you'll like this. It's a good one. I thought we had a great conversation, and kick back, enjoy the show. Well, hey, AJ, welcome to the show.
Hey, thanks so much, Nate, for having me here.
Yeah, my pleasure. I'm glad you and I got a chance to reconnect. I know it's been a little bit. So before I go into what we're going to be talking about on today's show, why don't you go ahead, introduce yourself, let everyone know who you are and what you do.
Definitely. So I'm Ajay Kumar, co-founder and CEO of TheHouseMonk. We've been in the prop tech industry for about 6 years now. We started off in the brokerage tech space, where we tried to build a platform for real estate brokers to take their work on the go on their phones. That didn't quite work, but we quickly pivoted into the property management industry, where we were helping property managers give a better tenancy experience. And since then, we've kind of scaled up the scope of what we do into the real estate customer experience management business. To give you a quick sense of what we do, we've noticed that there's a lot of companies which are coming in, which are managing space in a very creative way. It can be co-living companies, student housing companies, co-working companies, even rental property management companies. And all of these companies, they have strong challenges in ensuring that they give a good customer experience, right? So what we help them in doing is we help them streamline the entire experience and bring it onto one platform. Mm-hmm. So right from the day a potential customer discovers their brand to the day they transact and possibly become a tenant, and all the way through the tenancy life cycle, whether it's monthly rental billing, whether it's customer support management, whether it's communication and creating and organizing events, all the way through to exit management. We've built a single platform that their team can use to help manage all of these different experiences that they can give for customers. And our system is very open. So if any of these businesses have a pre-existing mobile app, they can integrate all of these services onto the mobile app. And even in case they don't have an app, we help them come out with an app as well, which their customers can use. So that's kind of what we do. The biggest pain points that we've kind of been solving is that a lot of customers, when they deal with co-living companies or property managers or any of these other businesses, is that the experience becomes pretty bad pretty quickly, because it's typically multi-channel. Right? Sometimes you have to go to their website to do something. Sometimes you have to call up someone to do something. Yep. Sometimes you drop an email. Sometimes you call into customer support. So it becomes a multi-channel experience. And first is customers don't want that, which is a very, very important thing. They want a single channel of communication with businesses that serve them. And on the other hand, for your own team, different teams are using different suites of software. right? Your sales team is using something else, your support team is using something else, for communication you're using something else.
Yep.
And on both sides, it's such a big letdown that your customers don't win, your own team is pretty much confused, and at the end of the day, the most important thing, which is customer experience, starts going down. It's extremely difficult in real estate, especially in property management and co-living businesses, because this is not a 1-2 week engagement, right? Your customers are going to be with you for months and months, possibly years as well.
Ideally.
So, ideally, yeah. If you do a good job, yeah, definitely, yeah.
Yep.
So, it's so you're going to have a very long relationship with customers, and it's not a very ephemeral relationship as well, right? So you're literally giving them a place to stay, right? So it's a very deep relationship. It's likely you're having the biggest share of their monthly expenditure, you have the biggest share of their wallet. So they expect you to take their business very seriously.
Right.
So given that it's high transaction, it's a very long life cycle. So it becomes very, very important to give a great experience, and that's what we've been doing over the last few years.
Yeah, you've just been sitting on your hands, just kind of kicking back with a little bit of mailbox money.
Yeah.
No. So I mean, I know you guys have been busy. So for a little bit of background, AJ and I, we connected when I was early on my journey in prop tech. And I was doing my prospecting, building out some lists of companies that I wanted to work with, came across the HouseMonk, and we had an opportunity to connect, find out what they were doing. And so I'm excited to kind of go into this show here, because I know that you guys are doing a ton of things. I have so much more respect. Not that I didn't respect your business then, but I have so much more respect now because, of course, now that I'm really working on the other side of the product, not just on the marketing of prop tech companies, but working on the other side of a product that handles that tenant life cycle. There are so many components to build in for, and the number of edge cases is unlimited.
It is.
To build a product that is both elegant and yet effective is really difficult, because the edge cases are unlimited. So we won't go too far into that, but let's kind of back up a little bit. What is your background that led you down this journey of building an app to handle these challenges in managing tenants and their relationships to where they live?
Mm-hmm. Well, I don't actually come from a real estate background, but I do come from a tech background. I was working for an analytical product company for many years before I started out into the real estate space. Broadly, we were helping Fortune 500 companies make better sense of their data. So this was in 2011, 12, 13, so around that time. What happened was, when I was looking for a house myself, when I was working there, I had a really bad experience with some of the brokers, who helped me find the house.
Yep.
And even eventually after that, even when I was staying in the property, so in India, collecting rent by cash is a big thing. So a lot of landlords here don't allow you to make online payments. They insist that you pay them in cash. So every month I had to go to the landlord's
Why is
house.
that? Why don't they want online payment?
So you can avoid tax, because when you collect it in cash, it never comes into the system. So that's a very big problem here as well. So every month I had to go to the landlord's house and give him the money in cash, which was obviously not an ideal experience.
Right.
And so this got me thinking that, hey, maybe there is something that we could do over here. And that's kind of when we got into the brokerage space. One of the things that we do, I think very interestingly, is that whenever we approach any industry, we actually start by doing services first. We don't jump directly into the tech, right? So even when we built the brokerage platform, we actually started by becoming a real estate broker ourselves. So me and my co-founder, we started the company, and even before we started working on the product, we started servicing customers. We started helping people rent homes. We started helping people buy homes. We started property owners sell.
You put yourself through the ringer.
Yeah. So that was very coincidental. So that was the first time. So we were actually doing that mainly to ensure that some services revenue could keep coming in while we were building the product. But what we realized is that, hey, that should not, even if that's not the aim, you should actually start by doing the service yourself, because you just get so much dirt on the market. You really understand what's happening on ground zero. So when we learned the brokerage market inside out, we really understood the mentality of landlords, like what tenants are looking for, what buyers are looking for, what sellers are looking for. So eventually, like we were able to understand what does a real estate broker actually do, and we were able to productize that
I feel like
pretty
that's a
quickly.
question that whether people want to be mean about it or not, like I feel like that's a question that would come up. Like, what does a real estate agent even do? All they do is just sign a check or write an offer, and then it's all good. And look, I'm all about giving real estate agents a hard time, and even leasing agents, as much as the next guy. But there's a lot of stuff that happens behind the scenes.
So initially, when I got my house, right, like when I was still working for my previous company, I ended up paying a month's rent to the agent, to find the house, and I felt that was exorbitantly high. I was not okay with that, and that was the biggest trigger for me, saying, "Hey, if this guy can make this much money, like I should be able to make a lot more than that." And that kind of gave me the push and nudge. But what I realized, like 6 months into doing that, is that it's not easy being a real estate broker. It's a tough job.
Yeah,
it's it's not as easy as what it seems on the outside. It's not, hey, like show 2 houses to one client and you walk away with a fat commission check. That's not how it works at all. It's really, really tough being a real estate agent. So I had newfound respect so initially I wanted to disrupt the brokerage market, but then quickly I moved on to a model where I wanted to enable the brokerage market, help them streamline how they were doing their business. So that was a big learning for me.
It's funny how that works, but I mean, you wouldn't have gotten that perspective and that filter had you not gone through the ringer. And that's why I think about it. Like back when I was an agent, and it wasn't even that long ago, but and it wasn't for that long a time. But the amount I learned in the short period of time that I learned, it's an unfair advantage to anyone else that's playing in our space that's never work those roles. It's very difficult to have the lens of what the agent is going through, or why the way some of the models or sets of business are set up. And for some that's fine. They don't want to do things the standard way, but others, I think it's important to have an in-depth understanding, of that.
No, when you're an agent, you're always in the middle of transactions, right? And what's really important to understand is that in the entire value chain, there is the search and discover, which typically starts online, or at least discovery in a lot of cases is going increasingly online. But to go from search to discover to transact, that final jump is a very, very big jump, right? A lot of deals start dropping at a transaction stage. Either they're not able to work on what's the deposit going to be, or once they see the house, in real life they're not happy with the location, or maybe they're not happy with how the space is optimized. They're not happy with the neighbors. There's so many things that happens at transaction. So I think that's one of the more interesting problems in real estate to solve in itself. That a lot of information, right, over the last 10 years has moved online. So now you can see the property online. You get a sense of the price online. You can see the neighborhood online. So many pictures, videos, 360-degree views. You can, whatever information you were getting offline, now you get it online. But still, the transactions are fundamentally happening offline, and that's the reason why agents are still getting, whatever they're getting, whether it's in a sale transaction or whether it's in a rental transaction. So I think as PropTech evolves more and more, we do need to give a lot of thought into why aren't we able to completely bring transactions online? So much of the information, at least 80% of the information is online, but that is still not removing the need for people to go offline and see the property before they actually transact.
So let's get down to brass tacks. So the HouseMonk is really designed to enhance the tenant experience more so than it's not which then helps the landlord and building operator. And from what I remember, from when we've talked, and obviously I do my homework beforehand. The HouseMonk was originally thought through for multifamily, like large multifamily buildings.
Yep.
And so what are some of the key features that tenants tend to use most?
So the feature sets obviously keep changing from geography to geography. So currently we have active operations in about, I think, 9 or 10 countries where we have paying customers. Where we notice, so let's say for a country like India, visitor management is very, very, very commonly used. So to give you a sense of the market condition, we have a lot of big gated communities, like, or multifamily properties, as you might refer to
Right.
it, which have upwards of 200, 300, 400 apartment units or condo
Yep.
units within one particular facility.
Yep.
So here, security is a very important thing. So one of our product features is that there's a visitor management system where at the main gate of the premises, the security guards, or the people who are manning the gate, so they're given a mobile app through which they make entries of any visitors who are going to be coming into the place, and that gives a notification on your app as a resident, and you can see the photo of whoever is actually coming in, and you can accept the visitor or reject the visitor. So that's a very, very commonly used feature, especially now, given that deliveries and everything is happening at home, whether it's ordering food or e-commerce or
Oh my gosh, our poor delivery, like the little package center that we have in our building. I mean, we don't even have. So I live in I rent a condo, and it's a nice building. I wouldn't say we're. I mean, it feels like luxury to me, but we're not the high end luxury. And our mailroom is the dry cleaner. Because you know what? 2 years ago, 2 years ago, that was all the space they needed.
Yeah.
And now, oh my goodness, it is stacked to the ceiling with boxes in there. It's crazy.
Yep. It's crazy. It is. And so also from a safety security perspective, that's a big challenge, right? Because you have possibly hundreds or thousands of people whose IDs you've not verified who are entering and leaving your premises. So now what does that mean from a security perspective is a very, very important question that a lot of property managers have been thinking about.
Yeah.
So the visitor management solution is one of the most highly used solutions in our ecosystem. A close second is the option for the community to start talking to each other and start chatting with each other. So we have like a common. It's kind of like Nextdoor, but only for your apartment.
Yeah.
Right. So that's a very commonly used feature.
Let me ask you this, AJ. First off, in India, do you guys have do you segment your population like we do in the US, like millennials and baby boomers?
Yeah, so we have millennials and old people. So that's how we refer to it over here.
Oh, there's so many, because I don't know if you're familiar with the Best of Nextdoor Twitter account.
No, I've not. No.
Oh my goodness.
Yeah. I used to follow
some people will take offense to this, but I'm going to say it anyway, because boomers are the most funny people ever on Nextdoor. I mean, it's just amazing thing that tend to go viral, or like just crazy stuff. Man, I was just curious if it was similar. I just imagine, but that makes a lot of sense, right? So like in our building, like I've never met some of my neighbors.
Yeah.
But I mean, I hear the one above me. But so this enables people, if they want to like send out something to the neighbors, maybe they're doing a potluck, maybe there's an event that weekend, maybe they saw something that seems suspicious and they want everyone to know. So it's a very quick neighborhood watch, and it's instant connect to be able to send it out to neighbors.
So what carpooling is a very common use case. For people to to get to their offices together.
Yep.
So that's something that we notice all the time. A lot of people invite their neighbors to some kind of maybe like festivals that they're celebrating, or maybe their kids' birthday parties.
Yep.
So that happens quite a lot. A lot of the property managers, they try to keep the community active. So they have some movie screenings going on in the clubhouse, like every week, or they have they've invited some kind of they might have invited some third-party company to come in and organize a small event, and they invite people through that. So these are all pretty common use cases from a communication perspective.
What you mentioned you're in 9 countries?
Yeah.
What are the other countries besides India?
So India is obviously our home market, but we have Singapore, we have Malaysia, we have Thailand as well. So Southeast Asia is another market for us. Middle East is another market for us. And recently we got our first few customers in Europe, and we have actually got a couple of them in the US as well.
Okay. So, and that's actually one of the things that you and I originally talked about, was like you guys expanding to the US. I've talked with a few different people, and I don't see a lot of property management focused, tenant landlord focused software companies leaving the US and going into other countries.
Yeah. Yep,
Why is that? What's the hurdle that keeps US companies from entering India? I mean, because especially what you talked about, the density.
Yeah.
On a whole nother level.
Yeah. Well, there are a few reasons, right? So first is that, financially, you really need to think, does it make sense? Because your return on every dollar that you invest into the US market is pretty high because your customers are paying you in US dollars as well. But when you start doing that, let's say in India or Southeast Asia or like any of the emerging economies in the world, that ROI is immediately going to come down. So that's something that you really need to think about. Second thing is that you can't actually use the same product because the market dynamics are so different, which is something that we're learning as well. So now that we're trying to make the move from Asia to Europe and to the US, we're noticing that the market is fundamentally very different. And we're obviously doing a lot of tweaks to the product to ensure that it can work there. So it's going to be the same thing for companies from the US who are looking at Asia as well. You're going to have to change the product very, very, very deeply. Yeah. And even otherwise, from a cultural perspective, most emerging economies are not yet in a stage where the business owners will come to your website, maybe like sign up for a free trial. And if it works, they're going to put a card on file and, you can just keep billing them. That's typically not the expectation. They want to meet someone before they buy. Yeah. So, you need to understand that business software is fairly new. Right. So it's not a 20, so it's not like businesses have been doing this, for 30, 40 years. And, they've been using some software for 20 years. And now, like we're giving them an upgrade, like, hey, now you were doing it through an on-premise solution. Now you can do it through the cloud. That's not actually what's happening. Invariably, people are moving from pen paper systems or maybe Microsoft Excel, right? So they're kind of moving away from that onto your solution. So it's a trust game more than anything else. So they really feel a lot more comfortable, if they come and, if they can meet someone before they buy. Now, that becomes a challenge because you have to have a large sales team that can go out and meet customers, before you make a sale. And the ACVs are not that high, right? So normally, typically, the rule of thumb is that if you can do 50,000 USD plus in ACV in the US market, typically you're okay to, have a salesperson, to go out and do the transaction, maybe a little lesser, but, that's typically the rule of thumb. But if you're looking at Asian markets, you'll have to start employing salespeople even for 1,000, 2,000, 3,000 USD in ACV as well. So you're going to have to maintain a very large sales team. So that becomes a little bit of a challenge. I think like another point that is often overlooked is that engineering and product companies in Asia are very, very competitive by themselves. There's a huge tech revolution that's happening in India for sure, because there are so many companies here that have come out. And given that engineering is relatively lower cost for an Indian company compared to an American company, because we have an abundance of engineering talent here, you keep seeing feature after feature after feature releasing, month over month. So normally the products that you might see over here are extremely feature rich. So it will definitely be very difficult for like US companies to compete with that. So yeah, that's another reason why it might not be in the best of interest, So it's one thing if you've gotten as much juice out of the US market as you can, and now you're looking for what other markets can I approach. In that case, it makes sense. But if you maybe have like 5% penetration or 10% penetration into the US market, you should just stick there and get the most out of that market.
Yeah, I mean, and that makes a lot of sense. I mean, for a lot of companies, if you even get a fair amount of penetration into New York City, I mean, you're going to build a big business. The unit economics are entirely different, as you mentioned. And of course, I think it's really impressive that you guys are in 9 countries, because even just, even if they're all different from the US and they have their own alignments, I mean, there's still significant differences there. I do want to shift a little bit. I'm glad we're talking international, because I know that you guys are working on a pretty big project recently, and it talks, or at least alludes to some of the changes made in your product. You guys recently released the Global Co-working Report. I think that's
Coliving.
The official title of it.
A Global Co-living Report.
Yeah. 61 pages of pretty insightful information about the global market that is co-living. And I thought we'll look at through this. So first off, fill me in. what is the HouseMonk's role in co-living, and
Mm-hmm.
what was the purpose of creating this global report?
Sure. So broadly, the HouseMonk is a technology provider to the co-living industry. And so we help co-living companies give a great tenancy experience. So once again, going back to what I was mentioning earlier, right from the time a potential tenant discovers a co-living brand to when they actually transact and sign the lease, and
Yep.
all the way through their tenancy lifecycle, we actually help them bring it onto a single platform, streamline their operations, and give an enhanced customer and tenancy experience. So that's broadly what we've been doing. How we find ourselves into this industry is that co-living in India is pretty huge. So we have about I think we're touching about like 60 co-living operators who've set up shop over the last few years, and more than I think we're touching about 150,000 people are already staying in organized co-living facilities, right? And that number is pretty much increasing at about 70-80% year over year. So the market is growing very, very quickly over here. And so that's something that we moved on that opportunity fairly quickly. So we got the first few clients in 2018, and through 2019 we've got a whole bunch of other co-living companies to sign up for our offering. And that's kind of what we've been doing. So we've been helping co-living companies give a great customer experience, and it's been going very well for us so far.
Yeah, and for the people who are watching on Facebook Live, I'm sharing the screen right now of the report so that they can get a view of it. And of course, I'll link to this report back on the TechNest website, technest.io, under the episode here once that's published. And I want to talk through some of the numbers here, because some of this is pretty incredible. And then you can fill in some color here. The growth number of tenants living in a co-living just in China has grown from 1.8 million to 2.9 million in the last 2 years.
That's not only in China, that's globally.
Oh, that's the global. Sorry. But the dominance of that is in China. Just the market size, right? So the actual market in China, per the report here, is about 6.8 or just 6.7, 6.8 billion with a B. Billion dollars. And for comparison purposes in the US, it's just over 200. So 200 million. Which is, that's not even, that's peanuts. 204 million is peanuts to 6.7 billion. What I thought was most fascinating, and maybe you can talk to, there's some, and this, you mentioned it earlier, right? That the economics are going to be different. In the US, the average rent paid by each tenant per month in one of those co-living is $1,700. Whereas in China, it's $200 a month. You have to have a fundamentally different business at that point.
Oh, wow. Maybe I can start by talking a little about how co-living started in China and why it's, at the scale that it is right now. And maybe we can talk about some of these differences that we're noticing in the report. Right. So in China, co-living started, I think, around 2011, 2012. So they definitely moved on the opportunity a little earlier. But what's interesting is that, I don't know if you've heard of this company called Lianjia. It's kind of like the Zillow of China. It's one of the biggest property marketplaces in China, and they saw an opportunity in managed rental housing, and they came out with what you're seeing right now, which is Z Rooms, which is essentially a subsidiary of Lianjia, right? So when they actually got started, Z Rooms had access to a lot of capital because they were a subsidiary of a very, very big company. But more than that, they had access to an unlimited number of property owners and tenants who were all searching, for each other on the Lianjia portal. So they were able to get supply and demand very, very quickly, and they were also able to, they had access to capital as well. So they got off.
So if I'm reading this correctly, Zerom has raised over $1 billion themselves.
Yep. So I think around 2014 is when they kind of spun it off into a separate company. But as I said, by then they'd already moved very, very quickly. Obviously, we need to keep in mind that the scales of population in China is just very, very different from what we notice in Europe or in the US. So
Yep.
they kind of like had a great head start. They moved very, very well. A very interesting thing to keep in mind about the Chinese ecosystem is that we've noticed time and again that Chinese entrepreneurs do not shy away from building operations intensive businesses. They don't mind, if it's not just a pure tech app, right? So they're okay to build out, multiple layers of the value chain, and they've moved very, very quickly on the opportunity. So Z-Rooms right now employs close to about 20,000 people, across their organization. The numbers are not that different for, a lot of the other Chinese competitors as well. So it's a very interesting market in China.
Yeah. And then let's compare that to the US where, in the report, it states the number of co-living operators. And obviously I'm assuming that this means when you're saying operator, I don't know what the classification is, but we're talking larger operators. We're not talking about like the neighborhood co-living setup.
So typically we normally have, so at least for this report, we've taken 3 parameters to define who an operator is. An operator needs to manage a minimum of 50 tenants. An operator needs to have his or her own website, or some form of digital presence, to come out with a brand. Or they should have raised some significant capital to build out the business. Right? We've kept it as about $1 million in capital, but as long as they have as long as they have 2 of the 3, we've counted them as an operator.
Yeah, and the companies here, you've got listed as Bungalow and Hub House.
Yeah.
Yeah.
There's a whole bunch of others as well. There's Star City. There's Ollie. There's Common. So co-living in the US is not that far behind, but there's a lot of momentum that's happening right now. So interestingly, maybe talking a little bit about the US co-living market. One point to keep in mind, Nate, is that co-living is not a new industry per se, right? So people have been sharing flats with their friends, for a very, very long amount of time.
Yeah, totally.
What's really happening? Yeah. So what's really happening is that a lot of operators, as we call them, or private businesses, have just thought, hey, maybe we can streamline and structure this ecosystem in a slightly better way, so that it can be a win-win, for all stakeholders. So that's it's more of formalization of an existing unorganized industry. And that's kind of what's been happening with co-living. Now, what we've noticed in the US is that a lot of the guys like Common and Ollie and so many of the other guys, they're going after a purpose-built market. Now, what that means is that they're trying to go to real estate developers or like landlords or property investors, and they're trying to convince them to build a completely new facility from scratch for the purpose of co-living, right? And when you do it that way, there's a lot of advantages, right? So as a co-living operator, you can design the place, you can maximize the ROI per square foot. You can make the building where you can foster interaction, you can have community spaces, all of which you cannot do if you're just going to take an existing building and like retrofit that into a co-living space, or if you're going to like change the interiors a little bit and try to make that into a co-living. But the pros and cons of this is that when you go after the purpose-built model, you typically get you have a say in the design. It can be done in a much better way. The yields are significantly higher. So typically we're talking 7-8% is the typical yield in co-living assets. But if it's purpose built, you can even get all the way up to 9, sometimes even 10%. If you can, like design the So really, really high yields. So from an investor perspective, like it obviously makes a lot of sense to do that. But it's a very slow to move model, right? So a lot of companies who have, let's say, 1,000 to 2,000 rooms or tenants currently that they're managing, they have almost 5 times or 10 times of that supply, which is captive, which is going to come onto the market over the next few years, because it's currently under construction. So the pro is that you can make a lot more money. You can give a much better tenancy experience, but you have to play a very, very long game. So that's those are the pros and cons of purpose building co-living facilities. The strategy that a lot of Indian companies and a lot of Chinese companies have taken is they've not really gone after the purpose built models. They've been signing existing landlords and existing buildings, and they've kind of been like repurposing that for co-living. So the tenancy experience might not be as high, but you can move pretty quickly, because there is existing supply. You don't need to build new supply. So that's one of the bigger reasons why, it's moved very quickly over here, and it's not moved that quickly in the US.
I really appreciate that breakdown. there's so much in this. Again, I'm going to link this report. For people who are listening that want to read this, you'll find it on technest.io, and just look for. I think this is going to be episode 67, 67 or 68. Can't quote me on it yet, but you'll be able to get that. And I would say, even if you're not working in co-living, this was really fascinating for me to read, because the thing about this is, if you're operating in single family rentals and the co-living space starts to speed up, I have to naturally ask, hey, is this going to eat into my business? Is this going to, are patterns in how people are renting going to shift enough to where it's going to eat into my business? Now, I think that for us in the US, we're probably a few years out on that, if that would have happened. And I think really what you'll see is, and AJ, correct me where I go wrong here, but I think we'll see in, very dense urban settings, obviously New York City starting really the one that'll get the most. And then you'll have other forward, cities. You'll have San Francisco, LA, Seattle, maybe Chicago, adopt some of this sort of housing, this style. But I don't think you're going to find it in Wichita, Kansas, in a major way. It's just, it's just probably not going to happen that way. Would you agree that that's probably true?
Yeah. Broadly, I definitely agree that it's true. Which is why what Bungalow is doing in the US is fairly interesting, because what they do is they don't actually take up, big buildings, as such. But what they do is that they take up 4 bedrooms and 5 bedrooms or 6 bedrooms, and they really take up, the large, apartments or, villa projects. And they kind of, put 5 strangers into one house. So is it co-living is really a question to ask, but, it's kind of like 5 people living together. So it's not like, 2 people sharing a flat. It's still, maybe like 5 or 6 people staying together. And that might be a trend that we might see even in tier 2 cities, even if not just in the metropolitan, parts of the country. But, like flat sharing is, I think, definitely here to stay. Like for so many reasons, it makes sense. But, I think I definitely agree to your point that if I were a property manager or a rental manager, I would definitely start thinking about co-living as well, because there is a natural pull from a demand side as well. We are noticing that, especially like, if people are moving new cities and they're going into a town that they've never, they've never been to before, and, they don't have people they know over there. Getting a space in a co-living gives you such a soft landing, because it's not just the space anymore, right? Because you're actually getting access to an entire community of people, who you can befriend, who you can speak to, who you can hang out with. And these spaces are, once again, they're kind of like made for interaction, right? So it's not very uncommon where a lot of co-living spaces, they actually have a co-working, area as well, in the common areas. So, that if you want to work out of there, that's something that you can do. A lot of these spaces, they have kind of like a small cafeteria of sorts. Like, if you want to grab food, you can do that as well. And they organize so many events. They invite so many people from outside to come and, be part of the facility. That, once again, you get access to, all of that. So it becomes really easy to have a soft landing in a new city if you get a space in a co-living. So that's on the demand side. That's definitely what's been, moving people towards co-living as well. So it's happening really fast. It's happening all over the world. And I don't think the US market is going to get, left behind by too much. So I really do see that over the next 3 years, co-living is definitely going to become fairly huge in the US. The existing operators, as I said, they have a lot of supply that's going to come onto the market over the next few years. So that in itself is going to give a huge boost to the co-living industry. And I wouldn't be surprised if we see a lot more operators enter the market as well.
Yeah, I tend to agree with quite a bit of that there. Where do you see, for you specifically, for the HouseMonk, what's the fastest growing market for you guys, or what's one market you're going to be pursuing the hardest in the next year or two?
We actually went, so we've started getting some customers in Europe, and we're very excited by what we're seeing over there. The Europe market is not huge, but it's not small either. It's somewhere, I would say it's right in the middle. But what's very fascinating is that buying patterns of European companies is very different from both US and India, in the sense that they are already using software which is very similar to the market in the US, but they still want to meet someone before they buy, which is very similar to India.
Yep.
So you have to figure out how do you get them to trust you, before you actually try to make the sale.
Yeah.
And especially given that labor is so expensive in Europe, that immediately gives you software a lot of value, right? So we're very excited by Europe, and we have a few customers already, but we really want to double down on that market over the next couple of years.
Yeah. Well, I mean, obviously, I think you're right. There's probably quite a bit of opportunity there, and of course, the density. While it may not be the level of India, you do have those concentrated densities
right.
that can, for a service such as this, really help that with early stage growth.
Yep.
Well, I'm gonna keep us shifting here. We're
Sure.
coming in towards the tail end of the show, and always like to make sure that we hit on the standard questions that I like to go over.
Okay.
And so that's going to bring us right into one of my favorite segments of the show. We call this For the Future. So For the Future is where I get to ask each guest who comes on the show to give their best predictions based on the following 4 questions. AJ, are you ready to play?
Ooh, wow. Yes.
All right. Question number 1. What does the HouseMonk, what does the HouseMonk look like 1 year from now?
1 year from now, we see ourselves being more global than we are today. So currently, as I said, we're in 8 countries, but co-living is happening in about 40 countries right now. Yep. So we see an increase in the number of countries that we're going to have clients. We also see ourselves going deeper into some of these markets. So as I said, we have a few clients in the US and a few in Europe, but we want to go much, much deeper. So both in terms of number of customers and the spread of the customers, we see an increase in that. We've also started looking at the opportunity in student housing quite seriously. Because student housing has become fairly big. I mean, it's an existing market, but it's become fairly big in itself. And the student housing movement is now finally hitting Asia as well. A lot of big companies are being set up. A lot of purpose-built student accommodations are hitting the market. So we see a very interesting opportunity there as well. So I think that's another thing that you might notice us doing. Going further into, or actually getting the inroads into the student housing market.
Hey, I don't know if this is just a US thing, but I have noticed that a big trend, and I don't know how big this market is, and because I'm not really in it. But I've noticed for the last year, maybe 2 years, a significant increase in what is billed as luxury student housing. Is that a US only thing?
No, I think so. I think we have a proxy for that in India and Asia as well, where typically the student housing has a local housing and a foreigner housing, right? So typically the foreigner housing is more upscale. It's kind of like the super premium version of the hostel. But typically that's meant for people who are coming from wealthier countries or even for wealthier students, for them to get that accommodation. And then there's a more pedestrian hostel or a dormitory, which is for
that's where I would be staying.
Yeah, that's where I see it as well, man.
I would be staying in the guest quarters of the pedestrian place. This is the house where I would be doing the co-living with the building maintenance crew.
yeah. But yeah, so that is the thing. So it's not just the US.
All right, yeah. All right, question number 2. I'm going to change it a little bit just for this episode. What does the co-living market look like 1 year from now?
I think a year from now, definitely there's going to be a lot of growth, but I don't think it's going to be, we're going to see as gigantic numbers globally as we saw over the last couple of years. Because in China, it is obviously starting to slow, right? It's pretty huge already. So I guess it's going to slow down. So from a global perspective, next year when we come out with the report, you might not see a significant increase. But what I'm very excited by is what's happening in the US and Europe. Because in 2020, we're expecting at least and about 50% growth in the number of people staying in co-livings in both of these markets.
Wow.
Yeah, because a lot of inventory is expected to hit the market. So I know that Common has a couple of facilities which are coming up. Star City has a couple of facilities which is coming up. Quarters have a couple of facilities which are coming up. So there's a lot of inventory that's going to hit the market in 2020. So I'm
Yep.
very excited to see the growth in US and Europe over the next year.
Wow.
Yeah.
All right. Question number 3. What's one industry trend you think will continue, but you wish would go away?
Oh, wow. This is across the real estate industry or specific to co-living?
I generally leave it nice and broad because I want to see how people answer it. You can apply any filter to this you'd like.
I think maybe touching back on the real estate broker market, I think the trend of brokers being pivotal to real estate transaction, I think that's here to stay. But I really wish agents would not charge a commission. I would really like to see a brokerage market where agents charge a flat fee, whether it's for selling a house or whether it's for renting a house, because their input does not really depend. Whether you're selling an apartment for $500,000 or $2 million, I don't think the increase in effort justifies a 4x commission for the latter compared to the former. I think either way it should be maybe like $5,000 or $10,000 or whatever the amount is going to be.
Yeah.
I would really like to see the commission structure change in the brokerage market, not based on a percentage of the transaction, but move it on to more of a flat fee.
Yeah, that'll be interesting because obviously, especially in the US, that that commission model is one of the ways that it's hidden as it's baked into the price. And if you were to fundamentally change that, it could be it'll make things interesting. That there's no way around that.
I think Redfin has given it a shot earlier, and I saw a couple of like rental brokerage companies that tried this a few years ago. But I guess the brokerage market is too big and it's too powerful, to completely change and like completely disrupt, from the ground up. But I really wish someone can achieve that, because I think if you move on to a model like that, that gives a better future, I feel, for the brokerage industry than the path that it's currently on.
Got it. All right. Question number 4 for the future. What's one thing you believe will dramatically change or fade away in real estate as a result of technological advances?
Oh, wow. I'm sure this is already a fairly big trend in the US, where people typically make rental payments online. But for the rest of the world, where people are still giving checks and they're still transacting in cash, I think that shift is going to happen very, very quickly. People will start paying through online sources. It's already happening here. It's not like we're too far behind, but possibly maybe like 50-60% of the market is transacting online, and possibly maybe like the remaining market is paying through checks or through cash. But I think that's gonna like move heavily onto tech in the next couple of years maybe. So moving rental transactions online is something that I'm looking forward to.
Yeah, there was a report that just came out this week that in the US from January to October alone, so just the first 10 months of the year of 2019, over $519 billion was paid in rent.
Wow.
And so you can see why there's a race. Who's going to dominate that market?
So whenever I keep seeing reports from other industries that say, hey, like we're a 100 billion market, we're this size, like whether it's e-commerce, whether it's retail, whether it's I can't help but laugh, because in real estate, like I'm not used to seeing small numbers, right? When you start looking at the size of the broad rental market, or how big is the housing market, or a brokerage market, like any number that I see, like I've not seen numbers smaller than 10-20 billion. And something like what you're saying right now, that close to $500 billion has been paid as rent in the first 9 months. I'm not surprised at all. It is a crazy.
It's a big number, and that's why when I talk to people about what we do, and they're like, oh, so you help landlords take rent online. Well, yeah, if that's all you see, you're seeing just a small piece of this, because it's not just about the rent transaction. There's other transactions that are tied to that rent transaction. And just think about it. If that's 33%, because that's a rule of thumb in the US, it's 1/3 of your rent should be no more than 1/3 of your take home.
Right.
your monthly income.
Yep.
So if you think about that, that means that portion of the population has a take home, ideally, of no less than 1.5 trillion.
Sure. Yeah. Yeah.
So all of the other purchases and transactions around those households, like that's what's at stake. That's what that's the true big opportunity. And for, as segmented as the market is, it means it's truly open.
Yep.
And that's why I get excited for it, because I'm like, well, we have an opportunity to really bring this and bridge a lot of that segmentation, make this easier, bring a more seamless and enjoyable experience to everybody.
It's not just rental management. We start calling it lifestyle management.
Yeah.
Because so much of what people do revolves around the house that they stay in, and you have a chance to impact how they live. So there is so much more you can do. Yeah.
Absolutely. Well, hey, we're going to wind down here. We got the last 3 questions. And AJ, these are more about you, so our listeners get to learn about you specifically. First one here is, what are you reading?
Oh, right now I'm reading this book called From Impossible to Inevitable. It's a book by Aaron Ross and Jason Lemkin. It kind of helps SaaS founders like myself understand how do you build out a better revenue pipeline, and how do you keep subscription revenue coming in. It's a very, very interesting book. I would strongly recommend to everyone.
Yeah. I have heard of this and I've seen this before. I don't think I've ever considered it, but until now, with your recommendation, I've just added that to my wish list.
Yeah, you should.
All right. Question number 2. Who are you learning from?
A lot of people. But I think in general, I've been learning from a lot of people on the internet, especially on LinkedIn. Or maybe I can give a shout out to Colin Cadmus. I think he's the VP of sales at Aircall. And he keeps coming out with a lot of
VP of sales. I'm sorry, which was the company?
Aircall.
Okay.
And he's come out with a lot of interesting content around how do you structure your sales team, how do you ensure that you can sign deals faster, how do you reduce your sales cycle, and so on and so forth. A really interesting guy, who I've been learning a lot from.
All right. And then question number 3. This is the final of the last 3. What inspires you?
Ooh. Man. So broadly, I'm very much a real estate tech guy. I really like being in this space. So what I really like, a lot of my friends find this very weird, but for a vacation or for a holiday, I actually like going to big urban cities. Like I don't like going for a retreat, to a beach or to a mountain. I really like going to big cities. I like seeing big buildings. I like everything about.
Come to Chicago, man.
Yeah, I will definitely.
Yeah.
So I really like everything about real estate. I like tall buildings. I like skyscrapers. I like the history behind it. So something that really does inspire me is such a huge real estate industry, and it's moved so slowly on technology adoption. And because when you compare what's the effect of technology on, let's say, the retail industry, it's a lot, right? So much of the supply chain is already on the tech platform. It's there's so much happening here. The impact is very real. Even on manufacturing, the impact is very real. But real estate has been so slow to move on technology. But I think the industry is starting to wake up right now. I think 10 years from now, we're going to see a very, very, very different real estate industry, at least from a process and internal perspective, where technology is just going to help shape so many different aspects of how this industry functions. And that is something that I'm very, very inspired by.
Well, very cool. AJ, thank you so much for your time. Really appreciate you sharing, and also appreciate the shout out in the global co-living report. We'll make sure we link that up and get that out to people. Before we sign off here, if people want to get in touch with you or they want to learn more about the HouseMonk, where do they go? How do they do that?
You can always drop me an email on aj@thehousemonk.com, or you can just visit our website, www.thehousemonk.com, and there are multiple ways to get in touch with us from there.
Very cool. Well, hey, we're going to sign off Facebook here, and we'll pull the show to a close, and I'll catch up with you afterwards as soon as we stop the recording, and appreciate your time here. And until then, we'll check in later.
Fantastic. Thank you so much, Nate, for your time, and thanks to the audience for listening as well.
Well, that's it for today. Thanks so much for listening to the TechNest podcast. Hey, don't forget you can get on the email list so you never miss an upcoming episode. That's technest.io. That's technest.io. Get on the email list. Go to the App Store, whether you found us on iTunes, Stitcher, SoundCloud, wherever you found us. Leave us a 5-star review and share it with your friends. And if you've got a guest or someone that you'd like to recommend, or if you think that you'd be a great guest on the show, hey, send me an email, nate@realteampanda.com. That's nate@realteampanda.com. See you guys later.